Get Rich Education is brought to you by Audible. More than 150,000 audiobooks to choose from for your mobile device.
Welcome to Get Rich Education with Keith Weinhold, giving you information and ideas on the investment that has turned more ordinary people into millionaires and billionaires than anything else, and can provide you with more wealth and happiness than you ever thought possible. Now, here's your host, investor, entrepreneur, business owner, and educator, Keith Weinhold.
Welcome to Get Rich Education. This is episode 27. I'm your host, and my name is Keith Weinhold. I know we've got many listeners that have listened to every show right from episode 1 more than 6 months ago because those listeners have told me, and it's hard for me to even express how grateful I am for that. So, hey, well, I'm feeling good. I just came from the gym a little earlier. Great workout, and my trainer had me doing some moves that I've never done before. The music was a little old today, though. They played like Naughty by Nature, OPP, and some other old stuff like that. So, you down with OPP? Yeah, I was in like 1993. So, well, hey, with residential real estate investing, if you're aware of leverage, cash flow, a good market, and a good property manager, rates of return of 25 to 30% per year are common. That's why real estate has made so many ordinary people wealthy. Those that come from the buy and hold stock world don't yet know how that's possible, and part of what we do here helps you understand that. Well, if you've got more time than money and you have an ambition to learn, today's show could be very much for you. And even if that's not your situation, you're going to find today intriguing because it's about how to make raw land produce cash flow for you. Now, typically when you think about cash flowing real estate, you think about residential, sometimes commercial, retail, and industrial, and some other things come to mind too, but it typically involves ongoing property management in any of those types, whether you choose to do that yourself or hire it out. Now, residential property management fees are typically 8 to 10% of gross monthly rent amounts. And then additionally, an investor often pays the manager a leasing fee when a new tenant is placed. That leasing fee is an additional 1/2 month's rent to a full month's rent based on the rent amount that unit commands. So total fees might equal 10 to 12% of your gross rents over the year, and depending on your margins, the management fees could take more than half of your monthly cash flow compared to if you manage it yourself. Now, you already know that I'm a big believer in hiring reputable professional property management. They protect your quality of life and shield you from any unpleasant disruptions or maintenance surprises from your tenant, which almost always take more of your time than you think. And we've talked about management on some shows lately after we discussed market selection on some earlier shows. Now, I spend no more than 2 hours a month, usually less than that, in trading emails with my property managers in various markets and then looking over the monthly statements that they send me. I spend my time up front in hiring the best managers, often by networking with others to find out who the best in a particular market is. Now, there's one market where I own an 11-unit apartment building. I really like that building. It's Class C, and it's in a Class C neighborhood. And that building, it's almost like having a fourplex on each of 3 floors. There are 4 units on the top floor, there's 4 on the middle floor, and then there are 3 on the bottom floor. Well, on the bottom floor, the area where a 4th unit would have been, that's where the laundry room, the mechanical room, and some secure tenant storage closets are located. Each of the 11 units is 2 bedrooms and 1 bathroom. It's a clean, tidy building. It's just older, and my property manager maintains it well, and he keeps it really highly occupied. I bought that one 2 years ago for $850,000. The monthly rents on it are $11,000. Now, I do have the master metered heating bill to pay for the building, but those numbers, $11,000 of monthly rent divided by an $850,000 purchase price, that's a rent to value ratio of about 1.3%. And those numbers totally work. That building produces nice cash flow. With an 8.5% cap rate and a 5.25% fixed 30-year mortgage note, there's more than 3 points of arbitrage on that building right there. So anyway, last fall, I had 2 ongoing vacancies at the same time for more than 2 weeks at that building. And that building's in a good market with very low vacancy. Usually when there's a vacancy there, as soon as one tenant is out, there might be like 0 to 3 days of vacancy. There's another tenant coming in almost right behind the outgoing one. So I couldn't figure out why there were 2+ weeks of vacancy in 2 units. Well, I hadn't seen that property in person for a while, and I was in that part of the country, and I decided to do a drive-by. Well, the grass was almost a foot long. I mean, there wasn't quite a hay baler out there, but that would turn off any respectable prospective tenant there in a very residential, urban, suburban area. I doubt any tenant would even want to go inside and see the unit because the tall grass just kind of gives the first impression that nothing was being taken care of. I mean, when you think about it, I wouldn't even want my building rented to the type of tenant that would accept that maintenance level at move-in. Well, I let the manager know about that as soon as I saw the tall grass. It was fall, and they admitted that they had probably cut off the lawn mowing service for the season too soon. After I told them about it, they got on it, the grass was cut, and 5 days later, magically, both units were rented. So nobody is infallible, even a good team member. I probably lost close to $2,000 rent income during the longer vacancy. Now, consider that same thing could have happened to an investor that self-managed their own unit and went on vacation for a few weeks, or self-managed and had a lawn service hired. For the beginning real estate investor, it's sort of a timeless question. Do you hire a manager or do you self-manage? The self-managed camp often says that no one is going to take better care of their buildings than them. I would actually agree with that. And at the same time, I would say that you've got to honor your time first. Life is made up of time. In this life, time is all we've got. Find a good manager and leverage your time through them. I want you to be the best version of yourself, and doing that takes time. Property management is a low-paid profession, maybe $20 an hour. Find your best and highest use somewhere starting at least $50 an hour or much, much higher. The investor is the right side of the property and real estate table to be on, not the management side. Well, getting back to this idea of making raw land produce cash flow for you, I mean, that very premise right there, that makes some people scratch their head. You know, when people think of cash flow, they think about tenants securing that underlying income stream. My guest today, Mark Podolsky, is really a leader, a pioneer of sorts in the small but lucrative niche of making raw land produce cash flow, not just for himself, as he's done for well over a decade, but he teaches you how to do it too, so you can learn from Mark's mistakes. Mark has resources where you can learn about this at thelandgeek.com, and he also has a podcast called The Best Passive Income Model Podcast, because Mark thinks he does have the best passive income model where there are no roofs or tenants or renovations or rehabs to deal with, and there can be very high rates of return. Mark is the real deal, and you can leverage Mark's knowledge and learn from the mistakes that he made earlier on. Dealing with vacant land totally solves your self-management versus professional management conundrum because there's essentially nothing that needs to be managed. This is a business model that's little understood, and there is an opportunity here. It's funny, some say they don't have enough money to get started in real estate, and in turn that they would be willing to learn something. But for a few people, when it comes right down to it, well, they really aren't too motivated to learn either. With some education, you can lock up huge tracts of land for just a few $100s and resell it at a profit. And there is demand for people to own vacant land. Some want to camp with their kids under the stars at night. Some get great satisfaction by hunting game on their own land. I mean, there's all kinds of reasons that people want land. Mark is reputable and he's got a compelling business model, so let's chat with him. All right, so we're going to talk about raw land and cash flow. No, those are not two separate subjects. They are one and the same, but those things sound like something that doesn't go together. But my next guest, Mark Podolsky, knows how they can go together. He has a model that's extremely lucrative. And in fact, Mark thinks it is the best passive income model out there. And he would know because he has done this no fewer than 5,000 times. And now he teaches others how to do it. Welcome to Get Rich Education, Mark Podolsky.
Hey, thanks so much, Keith. I'm thrilled to be here.
It's good to have you here. Your model is so different. A lot of individual real estate investors are in residential real estate investing, and that entire world of financing, of finding tenants, of maximizing occupancy. But you're not concerned with most any of that stuff. And you've got a model where you go ahead and tie up raw land and profit that way. So how did you get into doing what you call the best passive income model?
You know, it's funny because I was actually a investment banker and I hated my job. And we hired this guy who was telling me he was going to tax deed auctions and buying up land for like next to nothing and then flipping them online. So I said, okay, that sounds interesting. You know, what kind of money are you making? He's like, well, I'm averaging a 300% return on investment. I said, 300%? I'm looking at companies all day long. I mean, thousands of companies, Keith. Oh, you're above average company. A great company had 15% EBIT margins or free cash flow, right? Your average company, 10%. And I'm looking at companies that have, 5% and less. And he's telling me 300%. So, I'm from St. Louis. We're the show me state and in Missouri. So I don't believe him. So he's like, well, come to an auction with me. So I go to New Mexico and I had like $3,000 at the time saved up for car repairs. And I told my wife, I'm like, look, I'm gonna take this money. I'm going to buy some raw land. She says, absolutely not. I'm like, no, don't worry. I'm like, worst case, we own land. I'm like, so what's the problem here? It's an asset. So sure enough, she's like, okay, fine. I bought 10 parcels of land at an average price of $300 a parcel. I mean, super, super cheap, Keith. There's no one there. And sure enough, I flipped them online for over $900.
So there's no one there, no competition. You're basically able to name your price?
Yeah. I mean, we're getting it for minimum bid. There's no one in the room to buy up, raw land. So sure enough, I made $9,000 on my $3,000 investment. And so the next auction I went to was in Arizona. And again, no one's in the room. And on that deal, I made over $90,000 in the next 6 months of selling off $9,000 worth of parcels. So I said to my wife, I'm like, I think I'm onto something. And she's like, well, don't quit your job. So I was like, okay, fine. So for 18 months, I did land part-time. I worked full-time until that income exceeded my investment banking income, and then I quit. And that was in 2001. And I've been doing this ever since. But what really excites me is the fact that I'm able now to take a parcel of land, sell it one time on an owner-financed note, right?
Yeah.
And then create recurring income. So it's a one-time sale. I have recurring income. So it's like rental income without a tenant, no toilets, no termites, no trash. It's headache-free, migraine-free real estate investing. What's better than that? That's why I think it's the best passive income model.
Okay, so you basically have two different ways where you can exercise this model. Is that right? Number one is flipping the land, where you buy it, hold it for a short period of time, and then just sell it outright for more. And the other one is where you buy it, you hold a seller finance note, and then you go ahead and let the buyer make payments to you. Is that right?
Keith, you've got it. Exactly. So we make over 300% on cash flips and over 1,000% return on owner-financed notes, right? And the best thing about it is that it's still a very non-competitive niche. I mean, you don't see on HGTV flip this land, right?
Right.
And most people can't wrap their head around just raw land. But it's fantastic. And you've got this asset that lasts forever. Ted Turner's got that famous quote, buy land, it's the only thing that lasts. He's the largest landowner in the country. And it's true. I've got nothing to protect like a house, right? And it lasts forever.
So just backing up for a moment, at the auction, how do you find out about the auction? How do you know where it is and when it's going to take place?
Well, there's a website that I like to use called NACO.org, NACO.org.
Okay.
And you can go and in your state, see all the counties, and then you just send out a quick email to all the county treasurers. When is your upcoming tax lien or tax deed auction coming up? Now, a tax lien is different than a tax deed. The deed, you own the property. The lien, you're bidding on the interest rate and the penalties associated with owning the lien on that property. If the lien holder doesn't pay it off, then you can foreclose and actually own the property. But that's a different model. I actually like to own the property because on tax liens, let's say you can make 16 to 24% return on your investment versus when you own it over 1,000%.
That's amazing. So my audience probably isn't familiar, not every one of them, with an owner finance note. And it sounds like that's how you create cash flow for yourself. When you go ahead and buy the property and you sell it to a new buyer and you hold on to the note so that the new buyer makes payments to you. Can you talk a little bit about how that works and when you hold a seller finance note, what the collateral is and so on?
Yeah. So let me walk you through it. So let's imagine, Keith,
all right, that
you want to buy a 40-acre parcel of land from me, but you don't have, say, $29,000. But $29,000 for 40 acres is an irresistible price.
Yeah.
So you're thinking, my gosh, I have to have this property. So no problem, Keith. You put, let's say, 10% down, $2,900, and you're like, okay, that's great. And then let's make it a car payment. Let's say you'll pay me $249 a month at a reasonable interest rate, let's say 8.7%.
Okay.
Over, I don't know, let's say 15 years. So now you're paying me $249 a month at a nice interest rate over 15 years, and you don't own that property yet until you pay off your note. So I'm structuring it with what we call a land contract. If you miss a payment, Keith, then you have 30 days to cure your default, and then you lose all the payments that you've made to me. So you're invested into continue making these payments. We have it structured so it's real easy for you anyways. And because it's so irresistible, they sell very quickly. Now on that down payment, usually I like to get my entire principal out just on the down payment.
Yeah.
Worst case, we'll go out a year and get our money out within a year.
Okay, so just based on the down payment amount that new buyer makes to you, you've already recouped your money, and then all those recurring monthly payments, that's just icing on the cake, pure profit.
Pure profit, correct.
So back to where you go ahead and purchase the properties, what are some of the reasons that these properties are available at auctions? What happened to the property to give it that condition where you can go in and buy it so inexpensively?
So basically, people that bought that property no longer want that property. They have a financial issue where they can't afford the taxes anymore, even though they're very inexpensive. They have a motivational issue because they live, let's say, in California and the property's in Texas, and they're never going to go and visit their property. And now they view that asset as a liability. I've been paying on this property for 5, 10, 15 years, and I'm never going to do anything on that property. I don't even want it anymore. Right? You have divorce situations, you have estate situations where mom and dad pass away, the kids get this property, they don't know anything about it, and now it's not an asset to them, it's a liability, they have to pay taxes on it, and they let it go. So there's a variety of reasons why someone would be motivated to sell that property so inexpensively to you. And again, they're not an emotional seller because typically they are distressed in some way. And because it's raw land, there's not that emotional connection to the property like there would be, let's say, a house.
Right. In residential real estate, which I think most of my listeners can relate to, when I buy, which might be in market or out of market, even when I buy out of market and I can't see the property I'm buying, I have a qualified home inspector go in there and walk the property and check everything out and then send me a report back. I mean, is there an equivalent to that in land investing? I mean, what do you really need to know about that property before you choose to buy that particular one?
Yeah, absolutely. Your due diligence is so important, especially in buying raw land. I mean, you don't want to buy a piece of property that nobody can find.
Yeah.
So you certainly want to make sure that you have a nice piece of property that has what we call ingress and egress.
Okay.
Legal access to that parcel. We also want to find a piece of property that has something compelling about it. Maybe there's mountain views. Maybe there's a lake nearby, a stream. There's recreational amenities nearby. Maybe it's in the path of growth. That area is just going to blow up one day. So we want to know all these things. I mean, there's a whole property report that I have my assistants go out and fill out for me. Now, there's a wonderful crowdsourcing website that you can use called wegolook.com. And they'll actually physically go out, stomp on your property, take pictures, shoot video for you, and fill out your property report. And it costs like $79. It's nothing. You could even save more money if you wanted to do a Craigslist gig and have somebody on Craigslist who's local go out and do the same thing. So it's very inexpensive and very simple to do your due diligence. But the great thing about this is it scales, right? You can buy parcels anywhere in the country, and you can run this business anywhere in the world as long as you have an internet connection.
Yeah, that's pretty compelling. And you don't have any of those ongoing management or tenant hassles here. That's really attractive.
Right. And then with Google Earth, you can even virtually look at your property. 95% of it can be done just on the computer because we're not looking inside anything.
Right.
You can see it and then just have somebody stomp on it. And, I want to know what the neighbors look like as well. I want to know if anyone's dumping out there. And that's kind of like the last leg of it. But 95% of it can be done online.
Yeah, I can relate to that. The one and only time I bought vacant land for investment, I had a local provider shoot a YouTube video of the property for me. So yeah, you definitely can get there remotely. Then the motivation for you finding this new buyer after you've already gone and purchased the property and you're looking for a new buyer, hopefully that will make those cash flow monthly payments to you. What's your formula for finding those buyers? What are those buyers' motivation for buying raw land? Where do you find them and why do they want it?
For a myriad of reasons. I mean, typically people that want to invest in raw land always want to invest in raw land. It's a commodity and an investment similar to, let's say, gold or silver or some other kind of commodity.
Yeah.
And then there's groups of people, huge groups of people that want to invest in raw land. I'm not sure if you've ever heard of the term prepper.
Oh, yeah.
So, I mean, that's a really big market. Military people love to own raw land, wide open spaces, no neighbors. They like to invest. And then you have people who are sophisticated land bankers that want to buy property in the path of growth and have the capital and resources to just hold it and continue paying the property taxes until growth catches up, and then they make huge returns just by buying and holding. So there's a myriad of people out there, but my favorite person to sell property to, unlike housing, is the neighbor.
Right.
Maybe you've got a rancher that needs to buy that adjoining lot. And until you come in, they didn't even know what was available. And they're already motivated because they certainly don't want to have to deal with some kind of unknown entity owning that adjoining parcel that might do something on that property that they would rather not have done.
Right. They might want a buffer, whether that's a buffer from noise or a buffer from being an eyesore, or they might just want to expand the size of their ranch if you have a contiguous adjoining parcel.
Right. So what's phenomenal about this model is you already have a built-in ideal buyer or buyers, because you could have several different neighbors and let them compete for that property.
Yeah, I think this is really fascinating. I definitely want to talk to you about it more here on the other side of the break, including how you can get started in this with no money. We're going to come right back with that on Get Rich Education with Mark Podolsky. I'm your host, Keith Weinhold. Get Rich Education listeners, how would you like the latest audiobook from Robert Kiyosaki, the #1 personal financial author of all time, for free? For my listeners, Audible is offering a free audiobook download with a free 30-day trial to give you the opportunity to check out their service. You can pick out any audiobook that you want. My pick is you really ought to read Robert Kiyosaki's new book, Second Chance, For Your Money and Your Life. It uses the lessons from the past and a brutal assessment of the present to prepare listeners to see and seize the future. Get yours now at audibletrial.com/getricheducation.
This is Rich Dad Advisor Ken McElroy. Listen to Get Rich Education with Keith Weinhold and don't quit your daydream.
Welcome back to Get Rich Education with our guest, Mark Podolsky, the owner of the landgeek.com and the Best Passive Income Model podcast. Listeners, it's kind of interesting. On a lot of the last few shows, we've been talking about the importance of property management and finding the right manager. And I firmly believe in residential real estate and having a good manager because it got me to where I am today, and it's very powerful. However, with Mark's model, you don't need to use a property manager at all because it's vacant land. And Mark is going to speak to us a little bit about how one can start with no money. How does one start doing this with no money, Mark?
Yeah, so basically what you're going to do is you're going to make a bunch of lowball offers. They're going to get accepted. And then you can do it two ways. You can have a longer due diligence period. So you say, well, yeah, I like your property. I'll buy it for this price, but it's going to take me about 90 days to do the due diligence. And they say, great. Now, again, Keith, there's no backup offers coming on that property for them because it's so non-competitive. So they say, sure, you can do your due diligence for 90 days and we'll close, let's say, if today is March 30th, we'll close on June 30th, something like that. So they say, great. So during that time, you start marketing that property very aggressively on places like Craigslist, Land and Farm, Land Watch, Land Flip. There's all these platforms where you can start marketing your property to people that already want to buy land. And then don't forget, you're going to hit the neighbors as well. So with almost no money, maybe the costs of a mailing and of maybe a $5 VA on Fiverr to do your marketing, you can control huge tracts of valuable property with almost no money. Make sense?
Yeah.
Very, very simple. And I have a number of people that do it that way. Or you can actually just do a very inexpensive $50 option contract and say, yeah, I like that property, but I'm going to test the market first. So give me 90 days on an option, and then we'll exercise that option in 90 days. And they say, fine. They sign the option agreement, and you go ahead and do it that way as well. So there's really two ways. So with less than, say, $100, you can lock up huge tracts of land and sell them.
So you can lock it up, sell it to someone else before you've really bought it, and that way you've effectively wholesaled the lot.
Correct. You can wholesale it, or you can even sell it retail. Absolutely. I have a lot of people who just wholesale property to me. They lock it up at a great price because, again, they're buying it 23 cents on the dollar. They'll sell it to me 60 cents on the dollar, and there's enough meat on the bone for me to sell it 80, 90 cents on the dollar.
That's a great way to win all around. So, I imagine some of my listeners are finding this pretty intriguing. So if one wants to go out and get started, they probably just don't want to go buy 5 acres on a hillside, but behind their home in the town where they live, right? I mean, what are some of the things that someone really needs to know? What's some of that knowledge that they have to have before they go out and do this?
Yeah, I mean, they need to get educated on basic due diligence, a basic understanding of raw land and the attributes that go with that. Understand how to look up and do your own research, let's say, for title. Because if it's an inexpensive piece of property, you don't necessarily have to close through a title company. You can do your own title reports or hire an abstractor for $80. But you need to understand the language of the market for sure, and you need to get educated on that. But once you kind of get educated, then sky's the limit, just like in any other business. So there's sort of that baseline knowledge that you need, and then you're going to just take it and go.
We're talking about knowledge about just certain innate components of land, like what's the depth to groundwater if someone wants to build a well there, or we have a good forest back there, so a hunter might want to buy it.
Exactly. What does it mean for a property to perk? What is ingress and egress? What are easements? So you can read a property report or a title report and understand what those things are. Basic due diligence issues that could come up and basic deed issues that could come up, just so that you don't get into trouble.
Okay, so those might be some common pitfalls to avoid. And I mean, you've been doing this yourself 5,000 times. I mean, you must have had at least one pit that you fell into. What's kind of the biggest mistake that you've made with land investing for cash flow so far, Mark?
Wow, Keith, I made so many mistakes when I first started. There wasn't anybody like me when I first started. I'm a big believer in mentors and just copying someone else who's been successful at something and just doing what they do and then iterating from there. So I didn't have anybody like that. So one of the biggest mistakes was I bought a community in Pennsylvania. I literally bought, or I locked up 1,000 parcels in an overdeveloped community. And Keith, I thought I was going to make millions upon millions of dollars on this one deal. I mean, this community was beautiful. It was gated. It was where all the wealthy people in that community lived. There were 2 PGA rated golf courses. There were 3 lakes. There were restaurants. It was an inexpensive property owners association, $1 million homes in the community. But I didn't understand how to structure that deal properly. I bought all 1,000 lots, and guess when I bought them? 2008. So what I would have done today, what I didn't know then, was I would have done a takedown deal. Instead of buying all 1,000 parcels, even though I was getting an amazing deal, I was paying almost nothing for them. But instead of doing it that way, I could have just done an easy takedown and done a release, maybe 10 parcels at a time, tested the market, sold those 10, and then bought the other 10. So I lock up all 1,000 parcels, but now I'm only on the hook for 10 at a time financially, and mitigated my risk, eased cash flow, and given myself some more leverage.
Yeah, it sounds like you were really out there on a limb right when the economy wouldn't sustain things very well. So
exactly. Huge mistake. But I learned from it. It was a good lesson.
Well, at this point, you've done so many deals and you've done it successfully for so long, and you are an expert in your field and something that in a niche that few people know how to do. But at one point, you've obviously here now decided to help others profit from dealing with raw land in this same way. So what kind of made you turn the corner from a consumer to being a producer and producing resources for others so they can learn?
I got a little depressed. And I was just kind of at that point where, I had certainty. I had enough cash flow coming in where the money coming in exceeded my fixed expenses. And there was like an emptiness there. Like there's more to life than just making a lot of money. And so what I was missing was the contribution part of it. And so now I've combined it. Now I have certainty with my business in Frontier Properties, but then I have contribution with Land Geek, where I'm teaching other people how to build these massive passive income portfolios for themselves. And I want to be that pebble in the pond. So when you drop a pebble in the pond, it ripples out. So if I can help you, Keith, become financially secure and financially free, it doesn't just help Keith Weinhold. It then enhances everybody that you touch in all your relationships. Because ultimately, there's been studies done on happiness. Money doesn't make anybody happy. But what does make people happy are the quality of the relationships. In relationships of stress is money. So if we can solve that big bucket for people, it helps them and it touches everybody in their lives. And that's really my mission, is to help people financially so that they can go and live richer lives, and then they can go and do contribution. It's just an abundance mentality. There's millions of acres out there. There's millions of parcels. If 1 million people got into this niche, they still couldn't buy up all the property. And that's my mission.
Yeah, it sure can be lonely at the top. Even if you're niched down into something, it can be pretty lonely at the top, and life's more fun with friends.
Yeah, absolutely. Absolutely. I just got an email from one of my students. He's 76 years old. He made $48,000 on his first land flip. Right? I mean, that moves the needle in his life. And he's 76 years old, and he couldn't thank me more. And I don't get that from buying and selling a piece of raw land. There's gratitude when you find a new owner of a piece of parcel, but it's not the same when you teach someone how to do this and they go out and they take action on what you've taught and then are successful. I mean, there's no greater feeling, at least for me.
Yeah, that's the difference between you achieving success and you achieving significance when you do it for somebody else. That's great.
Yeah.
So how do my listeners find out more about this, Mark?
So there's a number of different ways they can learn more. Certainly on iTunes, the Best Passive Income Model podcast. We talk a lot about it. There's also the Land Geek podcast, which I also have on iTunes, but I don't currently update. But there's, maybe there's 100 or something podcasts on there just devoted to land investing. And then there's the website, which is thelandgeek.com. You can download the Passive Income Blueprint for free, get the ebook, How to Avoid the 3 Fatal Land Buying Mistakes, and then you get the podcast each week to your email inbox.
All right, listeners, so I encourage you to check that out. Check out those podcasts and be sure to check out thelandgeek.com. I've gotten to know Mark a little bit. He's credible, and few, if anybody, do this better than Mark. So thanks so much for coming on to Get Rich Education today, Mark.
Keith, I can't thank you enough. I really appreciate the time you spent, and I love your podcast. I love what you're doing.
Well, there's just another example of how you can profit in real estate. TheLandGeek.com and the Best Passive Income Model podcast is how you can catch up with Mark. It was both Mark Twain and Will Rogers that are famously quoted in different variations of buy land, they ain't making any more of it. I think that was before Dubai rose to prominence, but I think you get the idea. Well, hey, it's been great to have you with us again this week on Get Rich Education. I expect every listen to be a great return on your time. For my developer, John Collins, producer, Vidran Jampo, designer, Nikon Roy, I'm your host, Keith Weinhold. Don't quit your daydream.
You've been listening to the Get Rich Education podcast, telling you what the wealthy won't tell you about real estate and investing. If you enjoyed the show, please take a minute to visit iTunes and leave your comments.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.